Is the cash over? The pandemic accelerated the shift away from banknotes in ways that no other single event had. As this happens, the official discussions about digital currencies are heating up. Can Slovakia be part of that change? A topic for the first day of a finance festival called Finweek. Welcome to the virtual event. We are just opening a 4-day event that follows up previous 3 fintech summits organized by Tech Summit Events. For the first time this year as a virtual event, as many conferences and networking sessions had to be cancelled due to coronavirus restrictions. The organizers opened a new era of specialized discussions, and again, you can look forward to listen to Slovak as well as foreign specialists sharing their views with you. And again, this is thanks to the partners, the main ones being the Slovak Ministry of Finance and the National Bank of Slovakia, the partner being British Embassy in Bratislava, and supporters being the Bratislava Stock Exchange, ČSOB, Oracle Corporation, and Raiffeisen Bank. To open the first Finweek properly, we have here the Slovak Minister of Finance, Mr. Eduard Heger, personally, whose task is to welcome you all to the very interesting 4-day conference focusing on not only the finance in crisis, but also the financial literacy, investment, and fintechs. It should give the answer to a question: will Slovakia become one of the European financial centers, mainly when it comes to fintech? Mr. Heger, the space is yours.
I would like to wish all of you the great, I would say, open mind for the new challenges that we are facing. The FinTech conference brings many interesting topics, and I'm convinced that it will bring also interesting views and answers that we need and that will help us to tackle the challenges we face today. And I know what I speak about as a Minister of Finance because even when I speak with other ministers of finance around Europe, it is very challenging to find resources, especially in times of crisis like this. But it's not about crying, it's about looking forward and investing every single euro the best possible way we can, and not do the things the same way as we did before. When I look back and I look at all my comments and all my focus on public finances a year ago, it was all about making the taxes more efficient, bringing better financial discipline, remodeling the budget in a way that we are very effective. Now, this year, where we came into the government right in the middle of COVID crisis, and it changed everything. It still keeps the priority on the financial discipline, on making the taxes most effective, especially here in Slovakia. But on the other hand, we have to think out of the box. That's very important, because this crisis showed that we are on a crossroad. And the crossroad is about stepping into new future. We see that many businesses have to rethink what's their future and how they will proceed in upcoming years and upcoming decades that we are facing. So, as we say, and it's been said, I think, over the last couple of months very often, every crisis is not only about challenge, but it's especially about new opportunities. And where does it sound more proper than on this kind of conference where you meet people who are seeking for new solutions, for new innovations that we all desire, that we all need. I always think when I think of innovations, I always think of Steve Jobs, and I think he was a unique person, because he didn't think only about how to improve something, but he looked the way what he could bring to the people that they wouldn't even think they need, but they would appreciate. So I think this is something that I wish to you as people who are seeking for good solutions, and not just good, but innovative solutions in fintech era. So this crisis, I would like to point out a little bit to the crisis and say that, we saw that the economy stopped for a couple of weeks, but totally stop. We wouldn't think that something like this is even possible in the 21st century, but it is. And I think this moment of stopping was very helpful in order to think what we could do different, what we could do the new way, and make order in things that we don't need to do at all. I'm in the process of discussing the budget for next year with the ministers, and we decided that we'll do some cuts in expenses for goods, for services, and for people. And I have to tell you that after 12 of discussions with these ministers, with 12 ministers, everybody said it's very difficult. But I encourage them, think new way. If you want to do new results, you have to do things different than you did before. So this is the challenge that we are facing as well. And we need Slovakia to move forward. And we know that the fintech era is something that is crucial for not only the 21st century, for the second millennium. We are in a digital age, and even though many people are still learning what it means, we all know that this is the future. So. Little bit for Ministry of Finance, we trying to keep up with the pace as well, and that's why we have the Center for Financial Innovation at the ministry, and we also cooperate with National Bank of Slovakia on improving the regulation and environment for fintech companies. The innovation hub that serves as a gateway for new companies and products is up and running since 2019. We cooperate with the National Bank on design of a regulatory sandbox, and which should allow for testing of new products and services, so they will be more prepared and ready for the end users. We also cooperate with the market participants in the European dialogue for sustainability in finance and investments, because the climate change is one of the biggest challenges for our future. The technologies and new approaches to responsible investments. This is something that requires the clients and investors to act reasonably. That's a very important approach, especially in Slovakia, and especially of these days. And acting reasonable with sufficient knowledge on what they are doing. That's why we provide different lectures to the students. And it is our focus to improve and even put more effort into this area, to training for teachers to improve the financial literacy. This is something that if we want to keep up as a nation, as a country, with the rest of the world, we have to invest enormous effort. So, like I said, the new opportunities and new ways to move forward requires knowledge, and that's why we need also your help. We need your support. We would like to be a support to you, and with this joint effort, I think we can achieve very nice results that will move Slovakia forward. And not only Slovakia, because as we know, we are part of European Union, we are part of community of nations, and if we grow stronger, then everybody succeeds and everybody wins out of this situation. So I believe that even this conference will be something for you where you will be able to refresh, to receive new inspiration, and come up with new ideas that will move forward your area, that will move forward your companies, that will move forward this whole industry. And I'm looking forward to all the results that will be also part of that will come out as a result of this conference that you are facing. And like I said, thank you very much for the opportunity to speak to you as a beginning. And you need to know that I'm a big fan of your success, and I wish you all the best and enjoy the conference. Thank you very much.
In the Smart City Hub in Bratislava, I would like to welcome Ľudovít, Deputy Governor of the Slovak National Bank. Hello.
Good morning.
Good morning. As well, there is Robert Schretner. Hello.
Hello. Hi.
If I shall continue westwards, in Prague we have Tomáš Holub, the member of the board of Czech National Bank.
Hello, good morning from the Czech National Bank.
To the UK, let me say hi, Marker, Commercial Director at Voltex.
And good morning from the UK.
And if I'm not mistaken, in the US, we have Miroslav Lukesh, Senior Vice President at MasterCard. Good morning as well, even though you probably have a night there.
Good morning. Good morning. Hello.
As it's been already said, we are just opening a 4-day event that follows up previous 3 FinTech Summits organized by Tech Summit Events for the first time this year as a virtual event. And again, this is thanks to the partners, the main ones being the Slovak Ministry of Finance. That's also was a big pleasure that the Minister of Finance was opening the whole Finweek. Also the National Bank of Slovakia, then the partner being the British Embassy in Bratislava, and supporters being the Bratislava Stock Exchange, ČSOB, Oracle Corporation, and Raiffeisen Bank. Thanks again, and now let's move to our speakers. Let me start in London, where Mark Trevor has a detailed overview of the impact COVID-19 has had on the use of cash in various countries. The New York Times wrote, cash is certainly not dead. Before the pandemic, bills and coins were used for 80% of the transactions in Europe, and the pandemic is about to wipe it out. So how do you see it, Mark Trevor?
Fantastic. Thank you for that. I mean, I think from a perspective of a company that manages cash and coins, that we're the largest manager of those payment methods in the UK, cash is very much alive and well. A lot of people rely heavily on cash, both consumers and businesses. Sure, there's been an impact of COVID, a big impact of COVID on cash, although that varies depending on which parts of the world you look at. There are certainly evidence to suggest that cash has increased in popularity during COVID as people have fallen back to a more traditional method of payments. What I'd like to do in the next 10 minutes is to really answer the question, well, not only answer the question, is cash over, but also address what we at Voltex believe central banks and commercial banks should do to keep cash, as you saw in the title of my presentation, both available and affordable. If I could just tell you a little bit about Voltex. We're a joint venture between Barclays and HSBC, and we effectively manage all of their cash, all of their customers' cash, their bank branches, their ATMs in the UK. We process about 40% of all of the wholesale processing of cash in the UK, and we work very closely with the Bank of England and what the Bank of England call the note circulation scheme, which regulates the flow of cash in the UK. We've actually extended our offering. When we started as a business, a recycling business who recycled notes and coins, where we've evolved now, as you can see over on the right of this slide, is a sort of full supply chain offering where we start by forecasting how much banks and businesses need, how much cash they need. We provide the cash, we manage the delivery of the cash by road, we manage the maintenance of devices associated with cash, be they ATMs or self-service checkouts in supermarkets. We get cash deposited to us, we count it, settle it, remove any counterfeit notes. I'll talk a little bit more about the security of cash later. So we're involved in the full cycle of cash. We've also extended our business to export our knowledge and experience around the world through a consulting proposition where we basically offer consulting to central banks, commercial banks and retailers around the management of cash, or the smarter management of cash, which is really what I want to talk about this morning, as I said, in terms of keeping cash available and affordable. And you can see here we've done work obviously in the UK, which is where we started, but we've also expanded and done or have given consulting advice to both Africa, Asia, the Middle East, and more recently in Eastern Europe. So what's happened with cash during COVID-19? Well, certainly in the UK, we saw a massive reduction in the use of cash when the UK went into total lockdown in March. I think the story is different in other countries. Just pulled up these two graphs which show currency in circulation on the left in the United States, statistics published by the Federal Reserve, and over the right, euro banknotes in circulation published by the European Central Bank. And despite what many may have predicted or perceived, you can see that around about March there was a significant increase in notes in circulation as we entered the COVID crisis in those two areas of the world. So central banks have seen increased demand for cash, bizarrely, during COVID. And I'll talk a little bit about the paradox between the stock of cash and cash used in transactions in a moment. Interestingly, I was speaking to a colleague at one of the world's largest cash production companies. They basically make banknotes, and they said their order book was full for the next 12 months in terms of orders. And they said that demand was primarily coming from growing economies such as Indonesia, Malaysia, Nigeria, and Africa. So I think the story is that cash certainly isn't dead at the moment, but it would be madness, I think, certainly in Europe, to say that cash was not decreasing as a payment method. And as we know, it has already been overtaken by both online transactions and debit cards as a payment method generally across the globe. And just coming back to the UK, I thought we could have a look at ATM transactions, which are, I think, a very good proxy for the use of cash. And you can see from the slide here that as we came into March and April, both the value of cash transactions on the left and the number of cash withdrawals from ATMs fell dramatically. But you can see that there has been a steady increase as we've started to ease out of lockdown in the UK as we move forward into May, June and July. And that's certainly been the continuing trend from August. We actually did some very recent market research of both consumers, small businesses in the UK. And I would stress that small businesses make up a very important part of the UK economy. They make up about 99% of all businesses in the UK. But this data on this slide is looking at consumers in the UK and does show in orange, a third of consumers stopped using cash during lockdown, which actually tallies with what I've just shown you around ATM withdrawals in the UK. But look at that, there's still 49% of consumers that we surveyed said that they still leave their house to get cash. So I think whilst there was a big reduction in cash, it still remains important for consumers. And you can see further along the graph, the fourth column along, some people were actually giving their cards to other people to obtain cash. These were people who were vulnerable, what we call shielded people that need to stay in their houses because of COVID. Actually, this slide, apologies, it's slightly mixed with the slide that follows. But if you can just focus on the orange and blue graphs, they show the volumes of both inflow in blue and outflow in orange at Voltex, our business. And you can see again where the dip is significant drop around about 60 to 80% March. You can see the recovery and the 0% level is actually pre-COVID. You can see the recovery taking place in August and September. So there has been a steady return to the use of cash in the UK. As I said, we process 40% of it. So I think we're a very good metric or measurement of the use of cash. The reality, I think currently cash in the UK is about 25% still pre-COVID volumes. But I think our prediction is it will return to about about 15% below, and that will be, to use that dreaded phrase, the new normal in the UK. And sorry, the slide that you can see behind this, I'm not quite sure why they've merged the block diagram. Go businesses, and we are small businesses. If their local bank branch closed, what would they do? Would they give up cash? And we expected them to say that they would give up cash because they didn't have the branch within a couple of miles to use. And of course, you'll be aware in both the UK and Europe, there's been a massive reduction in the number of bank branches. But interestingly, the respondents to our survey, who were all businesses, as I say, make up 99% of businesses in the UK, said they would use the post office. The post office is a very active network still in the UK with 11,000 branches, or they try and find a different bank, or they travel further to another bank. It was only actually 10% that said they would go cashless. So what I would think this slide shows is the importance of cash remains to the vast majority of small businesses. Now, the challenge with cash, it's definitely here to stay. I think the real challenge with cash is it's getting more expensive. If you look at this left-hand graph, we also asked the small businesses in our survey what they thought about the cost of cash. The first column of those three shows that the very small businesses with 1 to 10 employees, 66% of them think that cash is a cheaper payment method. But as you move to the right and increase the number of employees, small businesses, less of them think that cash is cheaper. And in fact, for businesses with between 100 and 250 employees, only half of them that cash is a cheaper method of payment. If you look on the right, we've got some statistics from the British Retail Consortium, who represent the major retailers in the UK, such as Tesco, Sainsbury's, Lidl, Aldi, and they actually they annually work out the cost of a cash transaction compared to credit cards and debit cards. And you can see there that the cash transaction at 1.66 pence per transaction is still significantly cheaper than the debit card at around 6p and the credit card at around 18p per transaction. But if I presented this data to you 2 or 3 years ago, the gap was much wider. Cash was around about a penny per transaction. Debit cards were about 10p. Cards were a massive 30 to 40p. So that gap between the cost of a cash transaction and the cost of a debit card and a credit card transaction is closing. Cash is becoming more expensive. Cards are becoming cheaper. I think overall, those statistics with the red arrows, this is from some work that McKinsey's did a couple of years ago, and I think we've heard this morning. Globally, we know cash payments have declined. I think the statistic I just heard was they represent 80%, still represent 80% of payments globally. But as I've said, cash costs are rising. We all know the costs associated with cash are large, fixed infrastructure costs, such as the security, the transport, those sort of the large physical assets that you need to manage cash are fixed and expensive, and therefore as volumes fall, the unit costs increase. So as Minister Hager said at the beginning of the conference, in every crisis there are new opportunities, and we believe if central banks and commercial banks want to keep cash choice for consumers and businesses, there are certain things they need to do. Some of the challenges in the current cash supply chain, I've touched upon those already. Our processes are very fragmented, infrastructure is duplicated, there are poor service levels provided by the numerous third parties involved in cash. There's a lot of what we call non-value add, i.e. when cash is moved around in armoured cars by road, there's no value added to that cash in transit. And of course, there's environmental damage done by armed vehicles that run on diesel, polluting the environment. And there's also the duplication of counting and sorting. I think when we surveyed supermarkets, we found that typically a supermarket counted cash 15 times before he handed it over to a cash in transit company for onward transmission to a cash center. And typically this slide shows the costs in the cash cycle. Look at the horizontal bars on the left: printing and coin production, wholesale cash processing, that's what we call Voltex, the bulk and local cash distribution, that's cash in transit, the involvement of managing cash on the high street, in both retail shops and bank branches, ATMs themselves, and consumer holding and handling. Those are the sort of percentages, if you like, that make up the costs in the cash cycle. And you can see that both cash in transit and the management of cash in the shop on the high street account for 35% or just under 35% respectively of the costs of cash. And you can see on the right there, I've identified some high-level strategies for reducing each of those areas, but I don't really want to get into the detail of those this morning. So the sort of solutions that we've been involved in, as I explained at the beginning, have been very much around managing the whole cash supply chain in an end-to-end way. So you remove a lot of those challenges, the 4 or 5 challenges that I previously identified. But you can look at it in both chain, if you like, and the back end of the cash supply chain. If you look at the front end, you know, my question would be, is white labeling the way ahead? And this picture here shows a white label bank branch that Voltex opened. We opened 3 of these last year as a pilot for 3 major banks in the UK. Those banks came together effectively to create a cash hub for their customers, both consumers and small businesses. And this proved extremely popular with small businesses in particular, because it's a place that they could come from, the banks that were participating. And you can imagine this for any bank or multiple banks using this facility to still transact cash in a very efficient and effective way. And there's a fair degree of automation used in this proposition. And at the back end, i.e. the wholesale end of cash management, is the answer multi-bank cash centers. This is a project we're involved in the Middle East, where the bank has decided to remove the duplication of multiple commercial banks managing their own cash and build a brand new multi-bank cash center where all of the commercial banks come together and share the costs of the fixed, of the infrastructure and the fixed costs, and therefore make the management of cash significantly cheaper for them as commercial banks and also the central bank, and allows the central bank to in control of cash also. So I hope I've given you a few ideas in my short time this morning. I think I'm slightly overrunning on my 15 minutes, so apologies for that. But in conclusion, we think that cash is important as a choice for consumers and businesses. Central banks and commercial banks should act to keep the cost of cash affordable, because if it becomes too expensive, I think market forces will drive it out of business. Some of the things that central banks and commercial banks can do to keep the cost of cash low and make it widely available are shown here, and that's adopting a more flexible model, right-sizing networks, pooling resources in the sort of multi-bank cash center that I showed you, or at the front end, white label bank branches, moving to more local recycling of cash, reducing the number of cash miles where it's moved around by expensive, smelly armored cars that pollute the environment, using technology to connect the buyers and sellers of cash. We're seeing a rise in the UK of what I call the Uber for cash, which is people using their smartphones, businesses and consumers, to acquire and sell cash, which makes it a much more efficient and effectively is sort of digitizing cash or converting it from the physical to the digital and back again. So using digital technology to make the management of cash, the trading of cash more efficient. And finally, central and commercial banks and the various stakeholders, the card companies, those that manage ATMs, working together and trying to develop technology to help cash on the basis of shared goals and shared interests. Thank you very much.
Thank you, Mark. Was interesting, and I think it will be good to hear the ideas of all. Any personal experiences, I would probably start with the center bankers, because in Czechia, as far as I know, as the people were insecure about their future, they started to check but not use it while shopping. So is this also the case in Slovakia? Probably I'll first start with Tomáš Holub in the Czech Republic, in the Czech National Bank.
Okay, thank you very much. Once again, good morning to everyone. Yes, I can confirm what Michaela has said. Our experience was quite the opposite to the UK's experience, in the sense that at the start of the COVID crisis, we actually had a jump in cash issued by the central bank. So people were hoarding cash to get ready for possible disruptions in electronic payments or stuff like that. That's the pattern of people behaving in crisis time here in Central European region. You hoard food, you hoard cash, because that makes you more secure. And of course, the media and the shops, they started to promote cashless payments, because there were rumors that cash could spread the virus. So people started to use the credit cards more frequently, even for small-scale payments. But the volume in cash didn't come down. It's still above the pre-COVID level, and it's growing currently at 10% in annual terms. So here I must confirm that cash is alive, and it's well, and the COVID has so far not reversed that situation. Quite on the contrary, the volume is now bigger than before. So thank you.
I thank you, Tomáš. And that's question for our colleague in Slovak bank, Mr. Ódor. How was it in Slovakia? Is it more like UK or the Czech Republic, as we had a similar background, so probably the behavior is similar, or is it in Eurozone?
Thank you. Good morning to everyone. And, if you compare also our beer consumption or the level of ice hockey playing, our experience was quite the same as in the Czech Republic. So first there was a surge in cash withdrawals from ATM machines, mainly because of precautionary motives. But later on, when also there was an increase in the limit of using contactless payments from 20 euros to 50 euros without entering a PIN number. So it helped also to foster electronic payments, but definitely cash is not dead. What maybe I would like to do is to broaden a bit the perspective, not just on COVID, but here we have a much more longer term trends in globally, which will gradually reshape the usage of cash and the usage of credit cards, because we should talk about not only the COVID period, but also emerging technologies which can make the payments faster, cheaper, and probably also more secure in the future. And that is why in a lot of countries, the usage is cash is much less than 80% in the UK or 70% in the euro area in general. So there are countries like Sweden or the Netherlands where people use cash only in 10-15% of transactions, which is why also central banks are talking a lot more about a potential for a central bank digital currency. And another trend is actually a global one. A lot of and there's a lot of discussions about dollar dominance, and some people would like to, like the former Bank of England Governor Carney. He wanted to see a kind of a synthetic global currency in order to go away from a dollar dominance. Another quite interesting perspective is that still in the 21st century, a lot of international transactions are extremely costly. According to the World Bank, for example, the average cost for remittances between countries is like 7.8%, which is extremely high in the 21st century. So there are really reasons why maybe we can help with new technologies, have to provide the citizens with much cheaper alternative. And the last thing I wanted to mention to broaden a debate a little bit is that there is also a monetary policy perspective on using a cash. Some people, like Ken Rogoff, he is advocating of abolishing the cash altogether in order to be able to charge negative interest rates. But also from a store of value perspective, since a lot of central banks now have zero or even below zero basic interest rates, there is a tendency for some banks, but also firms to hoard cash actually for a store of value purposes. So we should distinguish between not only a medium of exchange perspective on money, but also a store of value perspective. So a lot of things are going on right now, and a lot of central banks are trying to use new technologies to develop also central bank digital currencies, since if we look back into the history, technology always shaped the form of money, the use of money, and despite the fact that cash is alive and well, I think in a longer term perspective we should be ready to adopt new technologies also in the monetary policy era. Thank you.
Good to hear that from the central banker, because that's what we are going to talk about later on. But I still keep with the topic of the use of cash lately. What numbers MasterCard saw in the spring months? And probably how is it changing in the last month?
In the spring, there was a case of contactless transactions and in general electronic transactions. So there was a good trend we saw. At the same time, obviously, the whole travel and entertainment segment was down, so cross-border was basically hugely declined. But we've seen that people actually did adopt at large scale new technologies, such as mobile payments, such as contactless, etc. I have to admit that, in Slovakia or Czech Republic, it was not necessarily the case, because here everybody's paying contactless, but we've seen the trend in many countries. So many countries in Western Europe, even the US, actually did adopt new technologies and took it really as an opportunity.
Thank you. And so what future does Robert strategy for the cash? Coming from Austria, very close to Czech Republic and Slovak, but being Eurozone country, and a blockchain pen, or I guess probably.
Yes. First of all, thank you very much. Here in Bratislava, I'm from Austria, Vienna, just came over in the morning, cross-border without any problems. Also, money should do that. So we should have not 7% in transfer costs, or of course, we are here still in the Eurozone. When we discuss cash and electronic means of payment, digital currencies, it reminds me very much to a discussion about horses and cars. We can discuss about horses, and they're still very much alive, and they're still there. And I think horse wagons are a very interesting means of transport, and we will see this for weddings and for occasions. I think that cash has no future. Cash is out, cash is over. We are here in Bratislava, and there is this wonderful castle, and the walls around are more than 1,000 years old. The means of payment with copper coins and gold coins are also more than 1,000 years old. That's wonderful. And we can keep that for certain special purposes. But for daily life, we must see that there is a so-called digital revolution. This conference is called Finweek. It's a short for FinTech. We must go towards technology. So if we discuss cash here, and to make cash, like Mark did this before, very clear, we must say this time is over. Cash is out. We see Asian countries very much in charge, very much changing towards digital payments. And this development, if we sleep here, we will lose a big chance to get our businesses ready for the next century. I'm from InnoMagic. It's a consultancy company. We do consultancy for large enterprises, for large multinationals in using blockchain technology, and also thinking about how cryptocurrencies could be used. Just to say one thing, payment is just one small portion what digital currencies in future could do. There is much more business opportunities in a so-called programmable currency, like the programmable euro, which is planned from the ECB now. And maybe Mr. Ódor can confirm also this. There is a policy paper on how to make the euro programmable, and that's the future. So for me, cash makes sense to some extent, but in the long run, it is definitely something we have to think that there will be a time after cash, and that's the digital currencies. And just let me tell you, what types of digital currencies do we have? We have three main types at the moment, which we know. First, we have a digital currency, and that's a topic we discuss now a bit more. It's central bank digital currency. It's a currency which is distributed and controlled by the central banks. Second type is a currency, a digital currency, also in a centralized way, issued by a company. Facebook thought about already and did first step to introduce a digital currency. This is the called Libra currency. It is distributed by a company. Plans are ongoing, lots of problems, and Mark Zuckerberg is still working hard on that to push that forward. Google is also working on such a system, a payment system. Third option is a decentralized way. One of the examples is Bitcoin as a cryptocurrency. This currency is only based on the new technology, the blockchain technology. Whereas the first two currencies can be done on blockchain, it can be done on usual database technology, which is state of the art. So with these three different options, the cryptocurrencies in a decentralized way are like a currency which are not located to any state or linked to any state or government. We can discuss the advantages or disadvantages, but there is no room for cash in this sphere of three types of currencies, which I see will be much more discussed in the future. Of course, we must say that elderly people, they have still not the opportunity to use smartphones, internet, so on. So we must shift towards a cashless society step by step. But my father, he's almost 80 years old. By the way, we had companies in Slovakia and so on. So he knows international business. He's very skeptic about digital payment. He hates online payment, but he does it. He uses it, 80 years old. Yeah, he has a smartphone, he can do it. So for some, of course, this could be a problem, and for this we must care. Also in some countries which are less advantaged, which are developing countries, we must find solutions there. But in the long run, we need first that everybody can have a bank account, and second that everybody has access to digital payments to reduce that gap. But on the other hand side, it would be for central banks, a digital payment would be the perfect way to collect taxes, to control anti-money laundering. We just, yesterday, a big scandal has been published and documents leaked on anti-money laundering. Many banks affected, also 2 Austrian banks involved, and the big UK banks. Cash is very fine for small business, but cash is also the means of money laundering, bribing. You put, of course, the suitcase of cash on the table to bribe somebody. You would not dare to do it via electronic means. So it's a big step towards avoiding crime. So why is there still such a big fuss about cash when we see so many disadvantages? It's expensive. It supports crime. It's an old way. It's an old way. And let me just explain, because to discuss about blockchain technology. If I hand over to Mr. Ódor, for instance, 100 euro, in cash, let's assume he's not from central bank, but he does some business for me. I hand over 100 euro. Do we need a bank to do that business? He provides some service. I give some money. We don't need a bank. What we have done, and the system, the digital system, is still twisted, is that when I transfer this on my mobile phone, I take out my phone, I write 100 euro to Mr. Ódor. At the back end, there is still a bank necessary to confirm this transaction. And with blockchain technology and this new technology, I can do what I would do in practice. I can send a money email to Mr. Ódor and can directly transfer without any bank. If we have these new systems in place, we will make life much easier. Of course, maybe the banking system might change. But as in the beginning I said, we're discussing horses and cars. We use horses, and they're very beautiful and very nice. And maybe cash will be to our grandchildren also to show them it's very nice, it was a good time to have cash, paper and coins, copper coins, very nice. But I think there is more, and there is much brighter future with digital payments. Thank you.
Thank you. I must say, when you speak about horses and cars, I still must say I imagine it much nicer going on a horseback to the forest, to the nature than using a car. And of course, when I want to go long distances, I'll use the car. But still, I would like to keep the chance to use the horse. So that's probably what we are going to talk about while talking about cash and digital money. But Mark, at the beginning, you mentioned digital cash. What you meant by that?
Sorry, Michaela, I didn't quite hear your question. Could you repeat it, please?
That you've mentioned a connection like digital cash. That we are going to speak more about this. What do you mean by that?
Yeah, so it's the sort of making cash virtual. So in answer to Robert's point, I think no one disagrees that we are moving towards new payment methodologies. But I think cash is still important as a consumer choice. We know there are other advantages of cash, such as speed of transaction, anonymity, instant settlement, the ability to budget using cash, the security of cash, despite what Robert says about cash's use in crime. Knives are also used in crime, but no one is suggesting we should ban knives globally. So the point I was making was that actually we need cash. Cash is here to stay. We need to give businesses and consumers the choice to use cash or digital currencies such as Robert has described. But we can use technology to make cash more efficient and preserve it as a payment method and let people have that choice. And what I mean by that is making cash virtual or digitized is getting the value of cash instantaneously. So, for example, in a store or a shop, you fit a smart safe type device where the shopkeeper puts the cash into the device and they then get instant settlement through the banking system for that cash. And therefore, you have decoupled the historic need to get that cash to a cash center or a bank to secure value. And therefore, you reduce the requirement to get a pickup of that cash as fast as possible because you've digitized it effectively. Does that make sense?
Yes, and I think, isn't that what, for example, MasterCard is doing, Miroslav?
I think for us, it is really about the digital means of payments, as Robert was talking about. It's, we also believe that cash is important, it's alive, but at the same time, it is something that is, question of the past. So sort of like optimizing that doesn't necessarily create the new value add. So instead, we really look at the digital future. Well, when the digital currencies come over, we actually do have, for example, like digital sandboxes, and we offer them to central banks, right? So these things we believe are coming, and we should focus on them. It's like, to use Robert's metaphor, which I like. It's like, getting better saddles on horses and better equipment for horse riding, as opposed to looking at how to move to the electric cars era. So I believe we should focus on how to make things digital and what are the benefits of people using digital payments. Now, it is what I mean by that is not necessarily just payment at merchants, right? Because the world of payments, and I'm sure dear central bankers, you would agree with me, it's way broader than just point of sale or merchant or retail. It is person to person, business to business, business to consumer, and vice versa. So what I'm myself actually looking at now is really person to person payments and how to make it digital, how to make it global phenomenon. And you would be surprised, this is not something that we discuss here, in the Central Europe. This is what I discuss as well in Western Europe, but also in Argentina, Lebanon, Nigeria, Malaysia. So this is something that all the countries are discussing as we speak. So everybody is moving into the digital payments. Again, having said that, cash is not that. Consumers may have the choice. The cost is rising, right? Of cash, the cost of cards is decreasing. Eventually, there's going to be evolution when cash will sort of, I would even say, extinct or become like a hobby. And I think, again, we should take it as an opportunity. Being in a Finweek, talking with FinTech, we should take it as an opportunity how to increase financial literacy, how to increase financial inclusion, how to reduce anti-money laundering, how to increase financial innovation, how to make business out of financial innovation. Just like, Slovakia, Czech Republic, Germany are today powerhouses in automotive. Why can't we become powerhouses in FinTech and digital payments, right? So that's actually where I would like to focus.
Thank you. So is the world ready for the global digital currency, or will we have more digital currencies? And as it was already mentioned, the former governor of the Bank of England, Mark Carney, warned last year against the destabilizing role of the US dollar and said that the central banks will probably need to work together to create a new reserve currency that will replace it. Could it be digital euro replacing it? And what do we do for being the one catching the global role? Maybe central bankers, probably Ľudovít?
Okay, so that is one of the topics I mentioned before, that a lot of central banks are working on digital currencies. Actually, we already have a central bank digital currency, but that is just between the central bank and the banking sector. So usually the commercial bank just have their accounts in a central bank, and we just provide zeros and ones between the central bank and the commercial banks. But what is missing? The access of other users like ordinary people or small businesses to the balance sheet of the central bank. So that is something we usually call the retail CBDC or retail central bank digital currency. But back to your question on dollar dominance. So the problem is that usually when you have one very dominant currency, then the monetary policy of that country actually creates a lot of spillovers to other countries, especially to emerging markets. And this is going through several channels. So one potential channel is through the of course, exchange rates of those countries. If when the Fed did the QE, a lot of emerging market countries were complaining that actually their currencies were appreciating against the US dollar, creating problems for them. But also there are financial linkages such as risk premia. So when there is an appetite for a very strong and safe currency, that is usually in times when the risk margins are quite high and people fly to safety, and that creates a lot of problems also to the emerging market economy. So if we would like to have a much less volatile global financial system, maybe we should think about how to create a less dollar dominant world. And there are several opportunities for that. One is actually just to rely on existing basket of currencies like the SDR, which is defined by the International Monetary Fund. Major central banks can create a basket of digital currencies, but I don't think that the transition will be very smooth and very easy, because usually, if we look back to the history, there was many times only one currency which dominated the world, the currency of the country which was the leading country in terms of economic strength and, of course, also political strength. So I don't think that the transition will be so easy, but it is definitely necessary for central banks to work on potentially how to make and also this is the sense, how can you make cash digital? So if central banks can provide cash-like features for a central bank digital currency, then of course also for the ordinary people it will be much more convenient, at much higher speed, much more secure, for example, than using a cash. So, just one remark at the end, which I think is important, maybe not from a central, or definitely not from a Central European perspective, but globally it is very important that you have 2 billion people unbanked globally. So these people do not have access to the banking system, to the financial system, but a lot of those have mobile phones. And definitely if we come up with innovations and come up with central bank digital currencies, actually we can provide quite important financial services to 2 billion more people. So that is one additional reason why I think we should think along those lines to come up with central bank digital currencies for the future.
And that's what Mark Zuckerberg was also talking about, that he aims at the unbanked people around the world. That doesn't really seem fit with the Facebook. Robert, probably a topic for you. Can Libra really aim at the unbanked?
Say Mark Zuckerberg is not famous working for the poor people, providing relief aid and programs. He's famous for building the largest social media network still, with 2.4 billion users. It's more than unbanked people, by the way. So it has 2.4 billion users. And I explained already blockchain technology. What is possible is that with the new way of using the internet for transfer of value, where the blockchain technology is the leading technology at the moment, we can now not only send emails with information, which we are very used to. We send that many messages. We can send emails with value. I can send this 100 euro email to somebody else. That enables this technology. It makes very much sense, of course, for Mark Zuckerberg to, when he has the Messenger, and WhatsApp and on all these messaging service with 2.4 active users, to not only provide a information transfer, but also to provide money transfer and even accumulate more data, not only what we talk to our friends, lovers, business partners, but also then how we deal with our finances. He will get a big bunch of data. So I think the main objective is not to give the unbanked a means of payment, which could be done by the central banks, as Mr. Ódor already mentioned so clear. I think this is a role of the state, and in this sense, in this aspect, I'm very much against a centralized company-based currency, which, by the way, Facebook is located in the US, so which means we have, with the dollar dominance, another probably a dominance of a US market. Although Libra currency is based, the foundation is based in Switzerland, but that has only a regulatory reason because it's a good haven for this currency. So I'm very critical about this Libra. On my blog, I have a blog, it's cryptorobbie.blog. I wrote about how Facebook lies about Libra, so you can read some facts, not from myself only, but from Wall Street Journal, from the Frankfurter Allgemeine, which collected some facts about Libra, and it's difficult. And also for smaller countries with their own currency, maybe not Slovakia, it's in the Eurozone, but for smaller countries in transition, this Libra currency can be very dangerous. These countries could be pushed or could be hindered in doing their own monetary policy, and that's a big danger.
Probably Czech Republic is not the right case of a country you meant by a small country in transition, but still I will aim
Sorry,
at
I didn't.
Tomáš.
Yeah, no, I didn't mean instant. No, not in transition. I mean smaller countries with their own currency. And Czech Republic, how we can discuss about how many inhabitants has Czech Republic and how many active users has Facebook. Facebook has 2.4 billion active users. Just send money. The inhabitants, I don't know exactly the inhabitant number of Czech Republic, but with their own currency. But it's marginal, the inhabitants of Czech Republic, and in those cases, it will be a minor player in this big money play against the company. So you have a central bank in Prague, or maybe also even Europe. We have 500 million inhabitants in Europe against these 2.4 billion users. That's the danger.
Yes, we have around 10 billion inhabitants, and Tomáš Holub is listening to what you say. Tomáš, how it is with the Czech National Bank when it comes to digital currency? Because even when we talk about digital euro, we are out of the Eurozone in the Czech Republic. So, what the central bank thinks about it?
Well, first of all, as I mentioned, we still have a lot of cash in the Czech Republic. And I agree that maybe when we talk about the future, this is technology of the past. But as long as it remains cheaper in terms of making transactions than electronic payments, as Mark showed us in his introductory presentation, we cannot say that cash is over. Okay, the electronic ways of payments will first have to prove that they are actually cost efficient, not just fancy. But anyway, we as a central bank, we issue currency, but it doesn't mean that we advertise use of currency. We have the approach of being technology neutral, so we don't discourage innovation. And it's also fair to say that even within a country, cash is a relatively small means of making payment. Most of the payments, large-scale payments, they are electronic, And we, as the central bank, are actually working on making those electronic payments faster and cheaper. We've introduced a scheme of instantaneous interbank payments in the Czech Republic. So there was a debate here that we should make a system for cheap peer-to-peer payments. But basically, if two people meet, they have a mobile phone with internet banking, they can make an electronic transfer of money between themselves using this scheme of instantaneous payments, and they can do it immediately. It's almost like handing cash from one hand to another. You can see the money on your account in 2 or 3 seconds if both participants and their banks are connected to that system. But here we are still talking about payments within a country and using one currency. I would agree that it's another issue when we start talking about cross-country payments, because I agree with what Ludo said. These are still very costly, and there are ways to improve, to economize. And personally, I see Libra as an attempt to create a system for small-scale cross-country payments that would be cheaper than the existing system. And for me, this is so far not so challenging for national monetary systems for small open economies as was suggested. But I think it's more of a regulatory issue. I agree that there will be a huge concentration of information in the hands of one company if this system is implemented, and we are not sure how to protect the data and misuse of the data. That's one issue. Another issue is that we shouldn't allow these innovations to circumvent existing regulations. For example, in terms of AML, it was mentioned that for conventional payments you have always a bank in between, but the bank is not just the bad guy who charges you fees, it's also the guy that does the AML control. And they don't do it perfectly. There are occasional scandals. The banks were not able to uncover all money laundering transactions, for sure, but they do this business. And how we guarantee that if there is a Libra-like scheme, there will be an equal degree of AML checking, protection, stuff like that. Also, who will guarantee that Libra will actually remain convertible into the promised basket of currencies? It's essentially a fixed exchange rate regime run by a private company. And we know from the past that many fixed exchange rate regimes, including the gold standard, the Bretton Woods systems, they in the end collapsed because even the central banks were not able to sustain them. And you need to regulate the system quite strictly to make sure that it's not just a vain promise, but that it can really be delivered by Facebook and the participants. So there is a host of regulatory issues. It's not just about having the smart technology of transferring value, but you need to think how to really plug this technology into the whole regulatory framework that we have here in place for good reasons. And this is the biggest challenge, and that's why the Libra project is not proceeding as fast as Zuckerberg and others have hoped, because they now need to think how to comply with all the regulatory requirements.
I could see that shake of Miroslav when you were talking about while Libra is not proceeding so quickly. Miroslav, probably why MasterCard left the alliance, the Libra project?
It's a very good and tough question. And indeed, Mastercard, for the record, was part of the Libra project, and then we stepped out because we believe that, if you want to do something like that, I agree with Mr. Holub, it needs to be regulated, it needs to sit within a certain frame. So absolutely, it is something that at the same time will show the way. Right? It's quite, I mean, since Hayek, we've been just looking at the Hayek's book I have here, we've been talking about whether central banks should be privatized or not, or whether the central banking should be privatized or not. Right? So in a sense, it is showing a way that private companies can enter into the space. I mean, just to complement Robert, I believe that so Facebook has another incentive to enter into the space, which is not just financial inclusion and banking, enabling the small businesses to work together, right? To create like a marketplace for small businesses, which is kind of not possible today. If you're a small farmer, if you are a small gig worker, etc., cash is basically eliminating you from the majority of the market, and that's something that Facebook with the currency can do. They can provide a marketplace. They have 2.4 billion active users. It can nicely merge that. Do they need their own currency for that? Of course, it sort of facilitates the whole flow and it's making things better. So on one hand, I see that Libra has really kind of great intentions. Whether they are real or not, I leave on a separate debate with Robert. But there are great intentions of financial inclusion, democratizing the whole financial world, which I think is phenomenal. At the same time, it has a challenge of working in certain unregulated environment. And to Mr. Holub's point, I do believe that if there should be global scale, we should have a control as citizens, as society, over something like that, right? So having said that, should we learn from Libra? Yes, maybe. Should we compete with Libra and do something better? Absolutely yes. Is cash the answer, and can we compete with cash against Libra? Absolutely no. Right. So again, showing the way. Let's take what's good at that. Let's think of financial inclusion. Let's think about enabling business to business. Let's, for example, think about using the instant payments that Czech National Bank and Slovak National Bank and others built into creating the real kind of great user experience. Because I agree with Mr. Holub that technically I can connect to my friends, on banking account, but with all respect, as a occasional heavy beer drinker, it's not a practical tool, right? I will not just pop up, my mobile banking and ask people for their account numbers. It needs to be a different user experience. So we have the infrastructure, which is great, and that's the difficult piece. Don't get me wrong, that's the difficult piece. We have it. Now let's do the easy bit, which Facebook can do much better than probably all of us, sitting on this call. Let's do the great UX, and that's how we will basically create something better in Libra, and we'll achieve the innovation, we'll achieve financial inclusion, and people will take it.
So Libra is a case that it can be done, or it should be done. But then we have China that is also proceeding quite nicely. And as I've read in the Crypto Robbie from Robert, he wrote, if the US and Europe do not quickly promote innovation and create improved framework conditions, we will lose this competition and will have to implement Chinese standards later. So, are we already too late, or do we still have the chance to catch up, Robert?
And having seen the progress China made in terms of fintech applications, I see that China is 3 years ahead. China is already working in 4 cities in China with a digital currency in the pilot project scheme. So they introduced their own digital yuan. Now let's take 2 facts. Fact 1, the Chinese renminbi or Chinese yuan, the Chinese currency, has gained more importance over the last 3 years. It came from, it scored number 12 3 years ago. Now it's number 4 behind US dollar and euro, and it's number 4. So the yuan itself gained importance on the cost of the British pound and the euro. First fact. Second fact is China actively introduce the cryptocurrency, not cryptocurrency, a digital central bank currency. They did pilot cases with 500,000 active users. And they, what is done? So if payment is done directly between persons, the VAT is automatically deducted. Customs payment can be deducted. Other fees can automatically be deducted. And there is no bank involved. Or, of course, the big four Chinese banks, they have also the big four, is the Industry Bank, Agricultural Bank, Bank of China, and the Construction Bank. These four banks merged for this blockchain, and they didn't finally publish whether it's blockchain-based or not. But no matter that, they are much more ahead. And just think, and I just take the phone again. If in future, I'm an importer of phones produced in China, and maybe I use JD.com or Alibaba, it could happen that we in the future open an account on like Amazon-like system, Alibaba, to order wholesale amounts of products as a company. And then we are also obliged to use a Chinese electronic payment system. So in the step-by-step approach of China, I fear that we will have a system in place which we don't like, which don't have to. We have a new hegemony up and coming. We now talked a lot, and Ľudovít explained that very clearly, that there was a US dollar dominance. It's still international business, international raw materials are traded in US dollar. That's the basis. It could be that when the digital means put into place with less transfer costs, it's cheaper to use this Chinese application in the beginning because it's cheap, and then we are into it. And China is very much working on that. They're very skilled, and they have the means, the staff, and also the willingness to do it. And they have not such big issues with data protection. Mark Zuckerberg doesn't have that. He's not the one who is the saint in protecting personal information. And China, I would say, it's the same league. It's also not very famous for GDPR, but Europe is a haven for data protection, and that's good. I like that. But we need the technology for the digital currency also to be developed at the same speed as we go towards data protection.
Well, just 10 days ago, the president of the European Central Bank, Christine Lagarde, has protested that the Eurozone Central Bank has asked those who making decisions on whether to press ahead with the development of the central bank's digital currency. So, how it looks now, Ľudovít, you probably know most.
Basically, when we are talking about Libra in China, this is something which I think that will not disrupt the European or global system, because we still can ban anything. But what is quite important, they are a quite important catalyst for reforms also in the remaining countries, because we see these developments as threats, with all the problems in the governance of Facebook, with privacy of information and so on, with the dominance of China in some of the tech markets. So if you look at the 10 biggest high-tech firms in the world, you will not find any European company. You will find only Chinese and US companies there. So basically what we need to do in Europe is to catch up and to be prepared for the solutions. As a central bank, we are not here actually to provide the customer experience. I think that is the best for the private sector to come up. But what we need to do is to have an infrastructure which is well prepared for this transition. And with infrastructure, I mean usually the instant payment system, where potentially also a central bank digital currency like a digital euro in the future, and also all the other fintech environment in Europe which can compete with all the others in China or the other side of the Atlantic. And that is the reason why in Europe now there is an accelerated pace of work on a potential digital euro. There has not been a decision made yet, so there is no decision that in 2 years or 3 year terms we will introduce a digital euro, but at least there is a very intense work on how to be prepared for this new stage of transformation in the digital area. And since everybody knows actually that the first mover advantage can be quite huge, we cannot afford in Europe to be very late, because otherwise, there are no 3 or 4 Facebooks all over the world. There's just one. So if people start to use the US system or the Chinese or whatever other system, then it will be hard to catch up. So that is the reason that we need to be prepared and do not forget about the first mover advantage. And that is the reason why now the work on a potential digital euro is much more intense than 1 or 2 years ago.
What does it mean for commercial banks, Mark? Because you work with them. How do they prepare, or can they prepare, or will they lose their position as such?
No, I think commercial banks are very much involved, as we know, with digital currency, and several of them, or many of them, are currently running projects in the new forms of digital currencies that we're seeing coming into the marketplace. So I think they're definitely at the heart of technological developments, and most banks that I've come into contact with in our industry have established parts of their bank dedicated to moving forward in digital currency. A point I'd like to make, though, is with Robert's sort of requirement for us to rush into a cashless society, I'm always slightly nervous with comparisons with Sweden, given that we know they have gone to something like 12% use of cash. But with no disrespect to our Swedish colleagues, I think Sweden is the size economically of North Carolina in the United States, so it's quite small. Also, the Riksbank in Sweden have recently said they feel they have moved too quickly towards a cashless society, and there is evidence that they're looking to reverse that trend, which I think plays to the argument of cash is still important, and as Tomáš has said, it's really still important that businesses and consumers have the choice of cash. I also think, looking at digital currencies, there are 4 key issues that need to be addressed, and I agree, we want to keep up with China and Asian economies as they develop in digital currency, but there are 4 key issues, really. I think the first one is the sort of trust around digital currency, and we've seen the volatility with cryptocurrencies over the last few years. I think also there's a lack of understanding of digital currency, and there's evidence to suggest that people, more educated people, are more warm towards these to digital currency. So I think there's a need to educate people about more effectively about digital currency. The other 2 points, I think, Robert's already identified the challenges his father has with digital, but also in his sort of attack on Mark Zuckerberg and Facebook, he actually uncovered one of the key points, which is around data privacy, and trust. Can you trust people with your data? And then finally, the cybersecurity piece, the security of the digital space. These 4 things, I think, need to be more adequately addressed before we rush headlong towards a cashless society.
Definitely, it's not any close, but we should be ready, as we've heard. So what about the non-Eurozone central bank? What approach does the Czech central bank take, Tomáš? Because, well, we are still very big fans of cash, but when all around there'll be digital currency going on, what do the country like Czech Republic do?
Okay, first of all, we are a small country, so probably we are not so much concerned whether the future hegemon it's US, Euro area or China. We are not in this kind of competition. So when we are talking about this issue, we are really talking about a local currency for the Czech Republic fulfilling its national role. In that regard, we don't need to be a front runner in this area. As I said, we are very far from the Swedish case. We have a lot of cash in circulation here. Cash is still very popular as a payment method. That's why we at the central bank are watching this topic very closely, but we can wait until someone really goes that way and learn from their experience, the positive sides as well as mistakes, because I think there is still a huge scope for mistakes in this digital currency area, because there is not one model central bank digital currency. Okay, we are talking about it as if we knew what kind of animal it was, but there are many difficult choices that you need to make, and depending on how you decide in those areas, you really change the properties of the system fundamentally. For example, you need to decide whether this currency would be anonymous or whether it would not be anonymous, and if not, who would be receiving the data. We are discussing this quite a lot, this data processing issue and regulation of it. So if it's anonymous, it's basically a relatively good modern substitute for cash from people's point of view. But of course, then you don't solve the issue of money laundering and terrorism financing. You could actually facilitate it by making cash electronic. On the other hand, if it's not anonymous, people may not view it as a good substitute to physical currency, and they may still prefer to keep physical cash. And then another choice is, do you then ban physical cash, or do the two things circulate in parallel and compete against each other? Also, it's very important to decide whether such a currency would be interest-bearing or non-interest-bearing, because many people claim that electronic central bank currency would eliminate the constraint of zero lower bound on nominal interest rate, but that's actually true only if this currency is interest-bearing and you can charge negative interest on it. Otherwise, actually, the zero lower bound would most probably be even more binding with a central bank digital currency. On the other hand, if you make the central bank digital currency interest-bearing, it might effectively crowd out current deposits in commercial banks, and you may face serious financial stability issues. You may completely redefine the borderline between central bank and commercial banks, the dual banking system as we know it and as we have built it after the communism fell here in the Czech Republic and also in Slovakia. That would change completely. The borderline would shift significantly in favor of the central bank. So these things are very difficult questions, and I think no one has so far a good definite answer on those particular choices. Thank you.
I think Tomáš just mentioned many questions that should be answered. So does anyone has any replies for Tomáš. I would like to know the point of view of the businesses. Miroslav, you are smiling, so you can start.
Yeah, I think the answer is that we just need to start experimenting, and we need to go ahead. Yes, there is a risk to that, but if we stand still, this is not an option, right? So we have to start an experiment, and maybe we are not like the biggest country in the Czech Republic of the world, so we cannot necessarily lead, but we can influence, and I believe we can create a powerhouse when it comes to technology and when it comes to fintech. And I think the sense of urgency is pretty high, because I do agree with Robert that China is becoming a potential new hegemon, but I don't think we have 3 years. At current pace, we are 10 or 15 years behind China. And if you think of China, I mean, just look at the picture you have in front of you, right? I mean, iWatch from China, the TV from China, a lot of the computers from China, the headphones from China, mine and Michaela's, So China's hegemon in goods, and they can dictate the international flows. Moreover, if you look at, mobile networks, not necessarily just mobile phones that everybody, has in the pockets are made in China. You have also base stations, in telco operators, the infrastructure that is a lot of times made in China, right? And last but not least, the financial sector. I mean, today, many people believe that it is the Americans who have networked with the largest number of issued cards. Unfortunately, from MasterCard, it's actually China UnionPay. So they are really advanced, even in the card business. And to say the least, basically, if you look at WeChat, if you look at Alipay, these are actually the standards where they get the instant payments, where they get the UX, they get a connection to business and the whole wrapping in the commercial sphere. So they are really ahead. And we just need to take it and learn from that, right? I mean, we don't have to reinvent the wheel. But we should take what's going on in the world, interpret it for ourselves, and start experimenting and start showing the way. That's what I believe the answer is. Let's experiment. And we have actually Czech Republic and Slovakia and Austria. Central Europe has great conditions to experiment. We are reasonably sized economies, not too small, not too big. We have developed a population. We have technically skilled people on the receiving end, on the consumer base, but also on the developer side, right? So we have to start experimenting. We have to start innovating.
Thank you. Mark, as I mentioned, I would like to hear the point of view of businesses. So what is another business? Do you have some answers for Tomáš when it comes to if the digital currency should be anonymous or anonymous, if it should bear interest, if there should be cash available for all people?
My view is that we should preserve as many of the qualities of cash in a digital currency, because I think, as we've said, that cash still is very popular, and for the reasons that I previously identified, anonymity is very important. Speed of transaction, obviously, you should get with digital means, as with instant settlement, etc., etc. So I think if we are going to move towards, inevitably we are moving to the use of digital currencies, they definitely should try and preserve some of the, or if not all of the attributes of cash, because I think that's what consumers and businesses will want. I'm slightly concerned with the sort of doom and gloom from my colleagues on the panel around fintech innovation, because I think fintech innovation, whilst I get the scale of advance with China, let's remind ourselves, China have had a big gap to close as a nation in terms of technological capability. But if you look at the sort of top 10 fintech centers in the world, many Western countries are on that list, Sweden, UK, USA, Australia, to name but a few. And you just need to look at the number of fintech deals going on in terms of private equity and venture capital in these markets. So I'm more optimistic about fintech in the Western world and its progress competing against Asia and other parts of the world.
That's a patriot, you can tell. And So now, moving to the central bank inside Eurozone, Ľudovít, would you have some answers? Should it be anonymous, or what do the banks that work on it, which is France, Lithuania, Netherlands, Italy, the European Central Bank, what do they prefer? What do they think about? Should it be anonymous? Should it bear interest? Because when you mentioned that we should be able to go to the negative interest rates, then probably there is the view of bearing interest. It's yours.
Reason why there is a hard work, because these are quite interesting questions, and there are a lot more. So basically there's an option to be an account-based digital currency, a distributed ledger technology based, whether to allow for offline settlement. So if there is no internet connection, what can we do with a central bank digital currency? So a lot of discussion is going on, and some people prefer that solution or other solution, but I think what was mentioned is very important. We need to start to experiment. We need to start an experimentation phase where we can figure out what features are the best for our citizens, and not just to decide from the center that this is the digital currency we are offering, and there is not anything anymore. So basically, I still think that even if we decide at a future point in time that we introduce a central bank digital currency, it will be at first phase definitely a complement for cash and not as a substitute. So I still think that there is a long way to go to erase cash from our lives at all. So I think that experimentation and finding out what features are the best for our citizens is a best way to go. But I'm glad that Tomáš raised one issue which is very sensitive, is the financial stability issue, and what is the future for the banking sector, because this is not just a question of a central bank digital currency where people can switch their deposits from the commercial banking sector to the central bank, but also if we are talking about global stable coins, actually, if they gather a lot of information from our citizens, there will be much more able to offer also efficient services to our citizens, like now the commercial banking sector is doing right now. So there can substitute a lot of products which are now inside the banking sector. And again, also the fintech companies, they are attacking some of the business models of banks, for example, in terms of currency exchanges. Now there are a lot of mobile applications which are cheaper than if you do it through your commercial bank. So basically a financial stability perspective on all these innovations is essential, and that is the reason why also the question is what should be the interest rates, should it be remunerated or not, and what can be so these are very hard questions, and there is no one answer to that. And that is one point. The other point, what I wanted to say is that actually there is a very interesting, although not very well explored, dimension of a potential central bank digital currency, that if you think about it, that the central bank opens the balance sheet to ordinary citizens then, or small businesses, that is actually a much more direct way for monetary policy. So you're not just tweaking with the interest rate and try to persuade banks to lend money to others, but actually you can put money on the accounts of people or businesses, and this can be dangerous or, for example, beneficial in some situations. So also this monetary perspective is quite interesting to discuss, and currently there are no good answers to that either, but the time can come when these types of monetary policy interventions might be required. So it is not, quite interesting now to discuss. It sounds a bit exotic at this time, but maybe 20 years from now it will not be exotic anymore.
An easy way for helicopter money to be processed. I can see Robert holds his microphone. He's ready for his words. So, Robert, I will add one more question to what's been asked by Thomas, and it's why now we are talking about digital currencies, the central bank digital currencies, because I found only a few years ago, even the central bank, the European Central Bank, was thinking about the central bank cryptocurrency. So, what is the difference? Why should we talk now about digital and not cryptocurrency?
Cryptocurrency refers to encryption on blockchain usually. That's the present interpretation. So, but central banks have the choice because blockchain is a distributed approach. You don't have a server like the internet is based on centralized servers, but every user in this community, like a WhatsApp group, a user will be a user for that money. And the WhatsApp group for money for a cryptocurrency is big, like Bitcoin with millions of users. It's like a shared community, this cryptocurrency. And that's the decentralized approach. Whereas the central bank digital currency refers to the centralized approach. And I like the comment of Ľ.Ódor very much, that this new technology could also give more strength to central banks. I would say, first I would say two things. One about innovation. When we talk about fintech and innovation, I agree with Mark. He said also there will be innovation possible and it's necessary, be it cash or be it digital currency. We were working on a project with an Austrian coding company, blockchain coding company, for Daimler Chrysler to develop a digital wallet. I have a wallet in my pocket, I have a wallet on my phone, but we were working on a wallet for a car, for Daimler Chrysler Automotive Company, which means we will have a wallet in the car linked to the electronic system of the car, and the wallet can pay for parking, for road tolling. In future, it could pay for taxes, insurance, and other maintenance services. So we have a new function. The car itself pays. We have new players, which means the car as a machine, and we work a lot with industry, machine-to-machine communication. You could have machines like a car paying. We have new players in this field, and they, of course, sorry for the horse thing, but they cannot pay cash, they will always use the digital currency. So in terms of innovation, and just imagine when you have the fridge starting to pay for the services they get, and the television you mentioned, which we get from China, and the screen, paying for the services themselves. We have new players, and robots, of course. So in this field of cryptocurrencies and digital currencies, we have a need for this because we have a need for this digital currency. It's a missing link, so it's absolutely necessary. First point. Second point is when I say I have a dream, then I have a dream. Yeah? And my dream is I dream of a currency which is a currency worldwide. And just let me compare to the internet. When we speak about the internet, we don't speak about Slovak internet, Czech internet, Austrian internet, Chinese internet, maybe a bit, Russian internet, maybe a bit, but we don't speak about the US internet, but we speak about the internet. And what I think could be a solution is that we get the currency, one single worldwide currency. It's of course completely stupid, but by the way, I remind you, we have one single internet, so it's not so stupid in the long run. So what I have a dream is, with Bitcoin, showing that since 10 years, we have a relatively stable but volatile, and it's by the critics, they always say, yeah, it's very volatile. Look at the Turkish lira, it's more volatile in the last year than the Bitcoin currency. So we have state-run currencies, centralized currencies, which are much more volatile. So the hypothesis that the central bank can ensure stability has been falsified very much. So it doesn't hold. It doesn't say that...
Sorry to interrupt you, but when you speak about one currency, then there's the question that we heard from Thomas. Who will have the data? Who will care for the data? Who will take care of them? And who will secure it?
True. I fully agree with Mark that many issues have to be solved. And also Tomáš mentioned it. It's the issue of privacy. With Bitcoin, I'm of course an early blockchainer and a Bitcoin fan as a model. Bitcoin has never been designed to pay a coffee downstairs in the pedestrian zone. Bitcoin is a store of value more. But it showed that there is a technology being able to store value. And Bitcoin, for instance, has a pseudonymity, which means they have kind of anonymity, but there is also some transparency involved. So it's a middle between full transparency. Everybody knows every transfer, but you don't know at the end who that does. But I agree, this problem of privacy must be solved, because I'm very much against to introduce full privacy coins. But, for instance, when we look at Hong Kong and the demonstrations against the central government in Hong Kong, people tend to use cash in order not to show that they bought a ticket for the metro to go to the demonstration, because otherwise they could be fined, they could have problems, they could be put in jail when it comes out they participated. So it's for dissidents, and we have a history in the eastern part of Europe where we have also centralized governments, not so nice dealing with data. We have to tackle this issue, I agree. But my dream is not to have a central bank controlled currency, but a currency which is based purely on the internet in a decentralized way. Just to give you an example, Bitcoin has no server. You cannot call Bitcoin Bank or whatever. There is no. It's just a program. It's like a computer virus. Can you call a computer virus? You cannot. But let's assume that we have a positive virus, that we have a positive a virus which does some return to the society, and it could be a virus which is put on the internet to be used as a means of payment. And nobody benefits from it, but nobody in terms of profit. But we use these cryptocurrencies, this encrypted, safe, cybersecurity safe currency for a means of payment, and nobody controls it. That would be the dream. Of course, we know we have United Nations, the kind of government of, and we know how it works. It's quite twisted still and difficult. But in the long run, we could try to shift towards that. Of course, there's political interest, Europe, the big players, Brazil, United States, China, Russia. But let's think of it, at least not to lose sight of the vision, where it could happen. And this currency could be, and just to add that, the currency is only a minor part. In future, we could have an internet which allows us to transfer values much more. Money is just a small portion of it. The Daimler Chrysler car wallet is just the beginning of a big future which we cannot imagine. I just give you an example. My daughter wanted to be a social media manager, an influencer, you know. But my daughter is now 18. When she was born, there was no social media. So we will have now. We have no idea what kind of jobs and development we will have. But the visions sometimes sound so great and not possible, but I think they are very possible and necessary. Thank you.
Thomas, have you got some answers to your questions?
Yes, but I think the more answers I get, the more questions also arise. And I think it's quite apparent here that the view of central bankers are different from the views of fintech people, because we have a different viewpoint. what Robert just said, this dream of having one currency for the whole world, if we view currency simply as a means of payment, yes, that might be the most efficient thing for humanity in the future. But we have many other functions that are being fulfilled by a monetary system. For example, monetary policy, which is there not just to stabilize the purchasing power of the currency, but also as a side effect, we help the governments to smooth the business cycle. And we can see how it becomes more difficult, for example, in the euro area, if the currency is shared by many nations, because those countries have different business cycles, and it's not so easy to have a monetary policy which is appropriate for all the participating countries. And then you come to the issue, okay, we need to supplement this single monetary policy by a fiscal union, single fiscal policy, because a monetary union without a fiscal union doesn't, and a banking union doesn't work properly. But can we really dream of having a global currency which is also backed by a global fiscal union and a global banking union? I think politically we are way too far from that. Okay, technologically it may be possible in 5 years. From the political point of view, it's of course unfeasible now, and it may never become feasible. So we need to think about both aspects, the policy side of the story as well as the technological side of the story. And the monetary system is not just about making fast and cheap payments. It's much more.
Yeah, and also it's also a lot about security, and we've heard a lot about it, but we still didn't say everything, I would say, because when I heard from Robert that everybody sees what's happening on Bitcoin blockchain, what the transactions are going on there, I would say it's really true, because only the few that understands it see it and can check it, and a very limited number of people. And I think this comes to point every time you use some really high tech. So how it is with the security when we come to digital? What I read from a former policeman who now advises when it comes to AML, he said digital currency will be both pro and contra money laundering. Depends how it will be solved. And how do you see it? Because I would like to know your view on the security when it comes to crypto crime, and when we move to the crypto space or digital space and digital crime, and also when there something happens. Now we saw COVID crisis and everyone was panicking like a world war would start again. So when a crisis is there, it's always good to have something in hand. And when everything will be digital, what we will have in hand. So that's many questions that I have, but I let you choose what you want to say about it. Miroslav, may I start with you?
Yeah, I think overall, what we need, and I'm sorry to say that because I'm a very liberal person, but what we'll need is some sort of regulation, obviously. And, you know, yes, I'm in favor of anonymous currencies on the one hand. At the same time, you know, as they contribute to crime and anti-money laundering, etc., there needs to be some sort of regulation. And I don't want to be naive that, you know, we will have some currency or something that is mainstream and it won't be regulated. It is for the benefit of the society. And yes, you know, we need to be careful that we don't give too much power to the hands of the government, for example, because, you know, as Robert rightfully pointed out, especially the recent Eastern European experiment with communism didn't prove that it's the way to go. But at the same time, we need to find the right level of regulation. And that's why, you know, the anonymity cannot come at the expense of anti-money laundering and fraud. At the same time, obviously, the digital world can be much more secure, right? If you think of just a simple example of losing cash, it's lost, right? It doesn't matter if it's 1 million euro or 5 years, it's lost. In digital, you can track it, you can trace it. So I think the great example is the COVID, Michael, as you mentioned, because, you know, on one hand, we wanted to keep our freedom, but at the same time, we wanted to trace people who kind of brought in COVID and, you know, limit the impact so that we don't have to lock down the economy, right? So that these are the trade-offs society will face, and I don't want to honestly dramatize that, because this society and politicians are facing these trade-offs every single day, and we need to kind of live with that. What I'm saying is that digital payments, digital currencies will actually give you better tools and more efficient tools to achieve the objectives. So, and that's very good about that.
Thank you. I don't see any raised hands, so, well, yeah, Robert?
Security. It's a very important point, and that's why I mentioned my father already being skeptic about online payment, but he does it finally, because it's easy, it's convenient. But in terms of security, what I can say is we have a crisis now, and the COVID crisis came and will go away again. So there will be a day when this crisis is over. It will take maybe longer than we think. With cryptocurrencies and blockchain-based technologies, I see it has come to stay. This will stay, because it's so evident that with this new blockchain technology, you make the internet better, the internet of information, where we can transfer now information, we can talk over the internet, we can send messages, but we cannot transfer value. And blockchain technology, with blockchain technology, it's possible to make money emails safe and secure. One point is that with any digital currency, it's important that when I send you an email, Michaela, I keep a copy that I can see, okay, I sent you an email, I have a copy. If I transfer you 100 euro with an email and keep a copy, I have 100 here and 100 there. So that's not the point. So in IT business, you call this a double spending problem. And Bitcoin blockchain was the first, and that's why it became popular, was the first to tackle the problem, to solve the problem of double spending. So if I send you this email with 100 euro, it's gone, it's away. It's just not anymore in our space. So we cannot control that. So with the blockchain technology, enables this point. Second is, in between us, when I send this to you, there shall be no other party who grabs that money, who steals it. Bitcoin solved that too. Bitcoin itself has not been hacked. Of course, we read in a newspaper it's used for crime. People lost their wallets, lost their passwords and so on. This happens. The usability is still very weak. This technology is at the very, very, very beginning. Let's say like the internet in the 90s. Yeah, very, very. But blockchain can be made very secure. I just have a contract. We negotiate a contract with a Korean car manufacturer. It's not only car manufacturer, but also they have a big conglomerate of real estate and production and so on. They see the future for these small payments via blockchain-based technology. They want to launch their own blockchain for all the fridges and devices. So we will see much more opportunities. And Asia is very much ahead of that. And of course, Korea looks at China very skeptic, and they want to have their own position and see that development much more than we do it.
Thank you. So, blockchain that could tackle all what's happening, regulation that will be very necessary. That's what we heard. So, regulators, we have here Ľudovít and Tomáš, who will start how it is with the security and how it will be with the security of digital currency. Okay, Ľudovít.
So it depends whether we are talking about private currencies or the central bank digital currency. So as we could see with the case of blockchain, not blockchain, but Bitcoin, actually the end product was just misused many times for small investors. They wanted to be part of the hype, and the fact that there is just a limited amount of Bitcoin, so there is no possibility to inflate it away, actually attracted a lot of people. The privacy attracted a lot of people, but history actually showed us that it is very hard to rely just on private currencies, where actually nobody is at the end responsible for the system as a whole. We started with different currencies 200, 300 years ago. Commercial banks were issuing their own currencies, and there was a problem with the exchangeability. So I still think that there is a reason why now a sovereign is involved in the monetary system of every nation, and I still think that in the next decades this will remain the same. And that is the reason where the sovereign will try to regulate all the other private currencies, but also, on the other hand, will try to design an attractive central bank digital currency which has also features people like. So in terms of the privacy, in my view, the problem is not that we are not sharing data with payments, because we are sharing a lot of data with any other transaction, or even just logging into our accounts. We are sending data to other companies. The question is that how are those data protected? What can we do to protect it more? And this is not just, as I mentioned, related to the monetary transactions. So in many cases, Google knows more about you than yourself or your wife, or maybe my wife knows more than Google, but I'm not sure anymore. So definitely the privacy issue is very important. And since we with Tomáš, we are coming from a very interesting regime where these data were misused many times. So we are quite sensitive how this question will be resolved. There are no easy answers. Some of the jurisdictions are quite heavy-handed, others are more reluctant, but at the end, in my view, all the technologies will have to solve the privacy issue, because as the slogan says, that we do not want another 1984 or something like that. So it's a very tough question.
Yeah, you reminded me of the Orwell's novel, because we have an economist here who spoke about the digital currency will bring an Orwell world to us. And he also spoke about the moment when it wouldn't be anonymous, then husband would buy a flower or a present for his wife, or probably not for his wife, and the wife would find out he bought it, would be looking forward to it, and the present or the flower wouldn't come. So that's a very dangerous moment, and we don't want to get there, definitely. But Tomáš, to get back to the security, how do you see it with the digital currency?
Well, again, it depends whether we are talking about central bank digital currencies. Then of course, the central banks who would organize the system would have to invest heavily into guaranteeing that it's safe against cyber attacks, that the data protection rules are very clearly specified and enforced. You would need to also solve the issue, who does the AML? I mentioned the two-tier monetary system of having a central bank issuing the currency, but then most of the business, including payments, done by commercial banks. But we also have a two-tier anti-AML system. Most of the AML job is done by commercial banks, and the central bank is usually supervising whether the commercial banks are doing the AML job properly. But of course, if we start issuing central bank digital currencies and most people have retail accounts at the central bank, then it will be the central bank who will be responsible for the principle, know your customer. So in any case, the kind of anonymity of such currency would be at least partially different from what we know from physical coins and banknotes. If we are talking about cyber coins or cyber assets, this is an area which so far is largely unregulated. Okay, Bitcoin, it's not basically regulated by any jurisdiction. It's very different from standard financial services, because financial services, you usually have a claim on someone. If you buy a financial product, for Bitcoin, you don't have a claim on anyone who promises you to do something or to pay something in the future. It's just an electronic entry in a decentralized system. So it's not so obvious who should be supervised in that sense. But definitely, this is a kind of interim stage. The Bitcoin system, it's still marginal when you compare it to the global monetary system. So there hasn't been urgent need to make it subject of tough regulation. But definitely, if we think it's growing in importance in the future, it's going to become a kind of systematic network, then I'm sure that public regulation and supervision would have to step in and establish clearer rules than the ones that we have at the moment.
Just when we are talking about the role of the central authorities, Carl asks, our viewer, asks through Slido, how should central banks approach their own cryptocurrency-like project? So how should central banks approach their own cryptocurrency-like project? Tomáš, do you have answer for him?
Well, first of all, the central banks, they will have to decide whether a central bank digital currency will be crypto, whether it will be a distributed ledger chain, or whether it will be based on accounts of people opened at central bank. Basically, then you run a centralized database, and it was already mentioned here. It is technically possible to do it a DLT for a central bank, but does it make sense to have a centralized currency that's run by a central bank and to combine it with the DLT technology? We can do it efficiently even with a centralized database at the central bank. And it's all about deciding whether it should be anonymous or whether it should not, or whether it should be a kind of semi-anonymous thing. So I think you should choose the technology depending on what you want to achieve, not the other way around, not to choose a technology that would push you to an unwanted outcome.
I think that's a nice reply. Thank you. And I'll go to Mark with the question of the security, but this time I'll also ask about the security of the cash, because I'll get to the beginning where we were speaking about the COVID-19 and all what was happening with the cash. And at the beginning of the pandemic coronavirus in Europe, Valdis Dombrovskis, the European Commission Vice President for Financial Services, wrote on Twitter, "Time to swap your coins for payment cards, safer for containing coronavirus. Mark, what do you think about that? Will this go into the future, even though we don't have any, so far, no medical evidence that cash transmits the virus?
No, I think, thank you, Michaela. I think there was a lot of speculation around the ability of cash to transmit the coronavirus, and there was a little bit of misinformation put around at the beginning of the pandemic. And I think people were initially quoting the World Health Organization as saying cash was dangerous in terms of it being a vector for COVID, but they quickly denied that, the World Health Organization. And it's and certainly some central banks I know adopted cash quarantining and actually destroying cash because they felt that was a risk. But I think cash is no more risk of transmitting COVID through cash as there is through picking up a tin of beans in the supermarket. And of course, we've not stopped doing that. But I understand the public's nervousness around contact in terms of COVID. So yeah, this was certainly contributed to the certainly I think in the UK the sudden drop in the demand for cash, the fear of COVID as being contaminating and spreading via cash was certainly contributory to that fall in demand. So, but I think we've moved on from that now, and I think people realise, as I said, there's no more risk of transmission of COVID through the use of cash through other medium or touching other surfaces.
And your view on the security of digital currency?
Yeah, the security is an interesting one. I mean, I raised the sort of 4 concerns earlier about, one of those being cyber security. I mean, I think if you look at the history of digital payments, if you look at cards, the amount of card fraud globally is absolutely massive. I mean, we're talking, I think in last year it was something like 30 billion of the value of card fraud transactions. So we need to be very careful. As I said earlier, before we rush to digital currencies without solving some of these problems. I get there is a need to move towards them, but we should not think that they are completely watertight when it comes to security, data privacy, etc., before we move to those. So we need to solve those sort of problems before we move wholeheartedly to digital currency.
Thank you. So now, because we are kind of, we have last 10 minutes. I think it's a time for the last question for everyone to sum up somehow. So when do we realistically plan to launch a CBDC of some sort? Are CBDCs close to becoming reality? Robert? The visionary will start first.
Yes. Thank you very much for it. I think we will get that, and the question is, when we look global, we'll get that sooner than we think. I think by 2025, in 5 years, China will be able to have a full-fledged digital currency, the digital yuan. That's not just a vision. They are working hard on it. The European Union is lazy, late, and does not enough, to my opinion. When we see South Korea, they're also working on digital currencies, digital solutions. I think it will take a while till in Europe we get that. And the US, I have no idea. It really depends whether conservative powers or liberal powers will take over after November. I have no clue. What I know is, what I like is that, of course, I think central banks have a big chance to gain back powers towards commercial banks, because now at the moment our monetary system, banks create money. They are the ones who initiate and create money, and I think this could be taken away from the banks. Why should a private bank have that right? Yeah, it's similar to Facebook. It's just not discussed. And it's taken back by the central banks, and which means that there could be much more control and much more supervision and regulatory power, when central banks, and Ódor mentioned that central banks have the power to put and open the balance sheet and give to small businesses directly a digital currency. The vision is very bright. The vision is very wonderful, actually, in that sense, so that the state directly interferes. In the long run, of course, I prefer a system which is it's of course a kind of a friendly virus in form of a digital currency. Like we will see companies purely on the internet. We are working now on concepts, but we have so-called distributed autonomous organizations, companies which run on the internet fully and 100%, no cash needed. Companies, for instance, doing my accountancy, my tax reporting. This can be a friendly virus. A virus I pay with cryptocurrency, and then this is done. For these models, we need a cryptocurrency. And yeah, for Europe, I would see maybe 2030, I don't know, in 10 years, we'll have that. And this 10-year approach has already been mentioned.
Thank you. I will add one more question to it from Slido. So would a CBDC satisfy people's needs as well as cash? And is a cashless society problematic? So we have 3 questions. When, realistically, CBDC, is it satisfactory for all the people as the cash is? And will be the cashless society problematic? Miroslav Lukáš?
Mm-hmm. So when, I think technically speaking, we are ready. But I have to agree that with Robert, it will take a while to kind of get to that, in Europe especially. And we should shorten this period. We should really try to shorten this period to innovate and to bring Europe up to speed and not to be at mercy of, let's say, Americans or Chinese, etc. Right? So I do hope that this horizon is shorter. Technically, it's not a problem. It's really more, a regulatory/political decision. Now, the next question was basically around safety and whether people can, whether digital currency can actually give people what they need, satisfy the needs. Yes, and I would say yes, absolutely. Here I see basically 3 roles. One is the technical role, so it needs to work, and I'm sure we are there already. It needs to have a great UX. It needs to be simple. It's as simple as cash and just handing over a coin or a banknote. That should be kind of the easiness of digital transaction as well. And here I also see a third role, which is a role of the regulator of a state to explain to people why this is good for them. I mean, again, I'm not talking about some sophisticated marketing, but what I think we lack in Europe in general is to really explain the benefits and why it's good for people. We've seen it, for example, with the face masks in Czech Republic especially. People kind of understood why it's good for them because it protects my mask, sort of protects you, right? So that was a good thing, and I think this kind of simplicity needs to be brought to digital currencies and digital payments so that people understand. And eventually, I think also that digital payments and digital currencies will be safer and are actually safer today. Yes, the volume is big, but as a percentage, it's tiny. And also, from this volume, you actually recover, through the system of justice and through tracking the transactions, you recover a big chunk of the fraudulent transactions, right? So already today, it is actually safer than cash, and it will be good for people eventually also when it comes to safety and security. So I hope I answered all the 3 questions. I hope I didn't forget one of those.
I think, if the cashless society is problematic, you said as the task for the government, for the authorities. Thank you.
It's actually, when it comes to kind of promoting it, but the cashless society as such is not problematic. Yes, the transition is a problematic one. It is an evolution, right? Yes, you have problems in Sweden, for example, with beggars who do not have electronic account, but then again, you have other means to solve for begging, right? And today you would find beggars in China have QR codes accepting Alipay, for example, right? So cashless society is not problematic at all. The transition obviously needs to be managed.
I can see Mark hesitates a bit about that. So, Mark, your view when we can start using CBDCs, and how do you see it satisfying the people's needs compared to the cash?
Thank you, Michaela. I think I'm probably not qualified to answer the question on CBDCs, given the level of expertise among my colleagues on the panel. Although I would say I did check the Bank of England website yesterday to see where my country stands on central bank digital currency, and I noticed that they had published a discussion paper in March on the subject. So I would say I'd probably align with the 2030 horizon that colleagues have already mentioned for Europe and UK. In terms of could the currency satisfy the public? I think it could, provided, as I said earlier, it preserves the features of cash. I'd be very nervous if I was going to buy a coffee and an intermediary was making making money out of that transaction. I think that's the nervousness. If you try and preserve the qualities of cash, then I think it could satisfy consumers. And as to the last point around is a cashless society problematic? I believe it is, as you've probably gathered already this morning. I think one of the challenges is the sort of clashing interests of the different stakeholders, and we've heard those this morning. I think central banks, as advanced by colleagues, they have this issue of control and sovereignty and wanting to control currencies. I think commercial banks are very nervous about being disintermediated by Mark Zuckerberg and Facebook with Libra, and I think without being disrespectful to card companies don't like cash because they can't make money out of it. So I think these conflicting interests, unless they're resolved, I think a cashless society will be problematic.
Thank you. Now I can see Miroslav if he is smiling at this point from Mark. Anyway, I have some more questions from Slido for our center bankers. Probably not only, but as we have very limited time, Ľudovít, I will start with you. I will also would like to know your idea if we can reach CBDCs in reality in 2030, as was said. But also there is a question. Blockchain is one type of distributed ledger. Are other types, e.g. DAG, more feasible for current system as they may leave issuing power in center banks?
Thank you. Actually, we have CBDC already right now with our business with the commercial banking sector. So we are not sending paper money and coins anymore. So it's just based on accounts. But if we are talking about the retail CBDC to open the accounts to people, I really expect that in the next 3 to 5 years, some country will come up with a prototype for that. I mean, a working prototype, not just experimenting, but using it on a larger scale. While in a major central banks all over the world, I expect it until, as it was mentioned, let's say in the next 10 years, let's see who will be the first mover on that. But definitely we will not kill the horse in the next 10 years. I still expect a very substantial usage of cash everywhere, and this is why I wanted to emphasize that we think CBDC as a complement to cash definitely in the first phase and not a substitute. So there is no need to fear that you will not have the option to pay for your coffee without banknotes. When can it be successful? So I think that the road can be really bumpy to a cashless society, that's for sure. But I don't think that there is some inherent problem to which contradicts to a cashless society. So I expect a cashless society in the next decades. But definitely, what was mentioned, we need the CBDC to have cash-like features, because people love the privacy, people love the convenience. So and for many of those already we have existing technologies, so we need to experiment. We need to experiment a lot. What are the features, the smart contracts? And at the end, I think it will not be a decision by a central bank, and it will not be a decision by a state, but simply the new technology will replace the old technology. It will take time, of course, but I think that it is really possible to have a cashless society, and we are heading in that direction. Not anytime soon, but in the future. And for the last question, that there are other distributed ledger technologies, not just a blockchain. Even in blockchain, you can imagine a permission blockchain, not just the permissionless technology. So there are, that is the reason why central banks are now exploring these technologies to decide which is the best for the objective or for the purpose we want. But definitely, my feeling is that for the retail CBDC, the most likely candidate is not a distributed ledger technology, but as an account-based system. But let's see how the technology will evolve in the next couple of years. Thank you so much.
Thank you for both answers. And Tomáš, also, when do you see it realistically being used at the retail level, the CBDC? And also there's a question from Maria. What would be the consequences of CBDC for payment systems and financial stability? You've touched that topic already, so that's a question for you.
Okay, I think China will definitely be the first mover, the big one with retail CBDC, because as we already discussed, they are in the testing phase. There is an advanced culture of paying cashless in China among people. They don't have to worry too much about privacy. They actually want to have more data about their people at central institutions. And as far as I understand, they are doing it in a way which is not a complete overhaul of the monetary system. They've teamed up with existing banks. They design it in a way that doesn't bring so many AML challenges, etc., etc. So they will probably be able to roll it out quite fast. In Europe, for me, the most interesting case to watch will be the e-krona in Sweden, because Sweden is a democratic society. They have gone almost cashless already, and they are looking for a feasible substitute for physical cash. So for us, that will be definitely a role model. Whether Czech koruna will become electronic by 2030, I'm not sure. Maybe we'll adopt the euro earlier than a digital currency, and then any project which is done in a centralized way in the European Union, in the euro area, might actually become also relevant for us. Well, sorry, the last question was about financial stability. I couldn't hear it well.
What would be the consequences of CBDC for payment systems and financial stability?
Yes, this question is especially relevant if we talk about a retail CBDC, which is based on people's account with the central bank, because then we really need to think about how much money, how much current deposits will move from the current commercial banks to the central banks, and whether there is not a risk that there will be kind of panic waves of people escaping from their commercial banks to the central bank at the point of crisis, because then the CBDC could actually make bank runs easier to do for people. And of course, bank runs are quite challenging episodes for financial stability. So this is clearly one of the aspects that we will have to think about before really introducing a central bank digital currency open to all people. And I don't have definite answers to that, but I just say we need to really carefully think it through.
Thank you very much, Thomas. I think you've all answered agreed with Mark, who said Europe and UK will be 2030, the CBDCs. And Mark, I must say, I still take UK as a part of Europe, even though not the European Union. So you don't have to point Europe and the UK. Anyway, thank you all for being with us. I thank to Mark Trevor, Commercial Director at Voltex, Ľudovít, NBC's Deputy Governor. With him in the studio is Robert Schwertner, who is the founder of InnoMagic. And I also thank to Miroslav Lukeš, the Senior Vice President at MasterCard, and Tomáš Holub, the member of the board at Czech National Bank. Thank you all for being part of the Finweek, of the first panel focusing on financing crisis. If you missed some part of our discussions, you will find it on a YouTube channel of Tech Summit events. You will also have a chance to listen to it in the form of a podcast or read an article summarizing everything interesting that has been said today. Thank you for being with us, and I wish you no more crisis, not only in finance. Have a nice day.